40% more. That had to be a mistake, a cruel typographical error that would surely vanish into thin air the moment I hit refresh. I stared at the bright, relentless glow of my dual monitors, my eyes straining against the numbers that refused to alter their shape. No matter how many times I clicked the reload button, the corporate compensation spreadsheet remained mockingly static. It was a comprehensive Excel workbook that Sean Kelly, a specialist in human resources, had accidentally emailed to the entire accounting and finance distribution list instead of the executive leadership team. Within 3 minutes, the desperate recall notification popped up in our inboxes, but the damage was already done. I had already downloaded the file and saved a copy to my personal secure drive. As I scrolled through the rows of data, a heavy, cold weight settled deep in my chest. Pierce Cole, who had been with Thorne Logistics for only 2 years, was listed with a base salary of $164,400. Audrey Gable, hired just 14 months ago, was earning $161,400. Spencer Boyd, a recent addition with a mere 8 months of tenure at the firm, was pulling in $174,000. All 3 of these individuals were under my direct guidance. All 3 of them still knocked on my office door multiple times a day, asking me to explain the basic mechanics of freight reconciliation, regional tax calculations, and depreciation schedules. Yet every single one of them was making 40% more than my current compensation. I slowly scrolled down to page 3, where my own name was listed in the alphabetical ledger. Dwight Vance, Director of Financial Analysis, 12 years of loyal service, base salary $118,500. For over a decade, I had been the silent, reliable engine of Thorne Logistics. I had built their entire multi-state compliance model from scratch, ensuring we remained compliant across 40 different jurisdictions. I had worked 60-hour weeks during tax seasons, fixed errors that would have triggered multi-million-dollar federal penalties, and trained every single analyst who walked through our doors. Yet my dedication had been rewarded with standard 3% annual raises, while the market apparently moved on without me. I looked out of my glass office window at Pierce Cole, who was currently laughing at a video on his phone. This was the same employee who, just last week, had accidentally posted a 7-figure accounts receivable ledger to the wrong corporate division, a mistake that took me a full day to unravel and correct. He was earning $45,000 more than me. The anger did not hit me immediately. It was a cold, calculating wave of absolute clarity that washed over me instead. I closed my laptop, walked down the carpeted hallway, and entered the office of Bradford Miller, the Vice President of Finance and my direct supervisor for the past 8 years. I did not wait for an invitation. I sat down in the leather chair opposite him and placed my tablet on his desk, the spreadsheet open to the compensation overview. "I need you to explain this to me, Bradford," I said, keeping my voice flat, level, and entirely devoid of emotion. Bradford looked up, his brow furrowing as he glanced at the screen. He recognized the spreadsheet layout instantly. The slight twitch in his left eye gave away his panic, but he quickly composed himself, leaning back in his executive chair and steepling his fingers in a classic management power pose. "Dwight, you know I cannot discuss individual compensation details of other staff members," Bradford said, adopting a patronizing tone that had grated on my nerves for years. "I am not asking you to discuss their salaries, Bradford. I am asking you to explain mine," I replied, pointing directly to my row on the screen. "I have given 12 years of my life to this department. I designed the automated reporting pipeline that saved us hundreds of hours of manual labor every month. I trained the very people on this list who are making 40% more than I am. How does this make financial sense?" Bradford sighed, a heavy, theatrical breath meant to convey that I was being difficult and unreasonable. "The talent market has shifted significantly over the past 2 years, Dwight. To attract top-tier candidates in today's competitive economy, we have to pay market rates. Your salary was set under a different corporate structure years ago, and we have kept it within the standard internal progression brackets. It is simply company policy." "Then adjust it," I said. "Bring me up to parity with the junior people I am training." He shrugged, a dismissive, casual gesture that broke whatever remaining loyalty I had for the company. It is not that simple, Dwight. Salary bands are locked until the next fiscal year, and even then, we have strict limits on internal promotion increases. Take it or leave it. That is the reality of the situation. I stared at him for a long moment, letting the silence fill the room until he shifted uncomfortably in his seat. I would like a formal salary review submitted to the executive board, I said. Bradford shook his head. I can submit the request, but I am telling you now, Reginald Thorne and the board will reject it. We just finished the annual review cycle last quarter. You received your standard 3% adjustment. There is no budget for out-of-cycle corrections. Was there anything else? I stood up, picked up my tablet, and walked out of his office without another word. The path forward was clear, and it did not involve waiting for Bradford Miller to throw me another crumb from the table. That evening, my home office was silent except for the rhythmic clicking of my keyboard and the hum of the air conditioning unit. I poured myself a glass of bourbon, sat down at my desk, and began to work on a document that would define my legacy at Thorne Logistics. I was 52 years old, an age where the corporate world often tries to write you off as obsolete or too expensive. From my window, I watched the evening rain wash over the quiet suburban street, a peaceful scene that contrasted sharply with the cold greed vibrating inside my chest. I knew the company's financial infrastructure better than anyone else alive, and that knowledge was about to become my greatest weapon. I started by drafting a comprehensive historical breakdown of my 12-year tenure. I documented every major milestone, database integration, and tax audit we had faced. I noted the $2 million in shipping tax credits I had secured in my third year by identifying an obscure loophole in interstate commerce regulations. I detailed the custom reconciliation database I had programmed in my sixth year, which had reduced billing errors by 95% and saved the billing department thousands of hours of manual corrections. I also compiled a meticulous log of every training session I had conducted for Pierce, Audrey, and Spencer, complete with dates, times, and topics covered. But the centerpiece of my report was the math. I calculated the exact financial value I had brought to the firm in the past year alone. Through system optimizations and audit prevention, I had saved the company $347,696. Specifically, my automated billing audit protocol had detected $62,000 in duplicate vendor billings that the operations team had double approved. My optimization of multi-state freight tax filings had avoided a penalty of $125,000 from the State Department of Revenue. Finally, my streamlined reporting process reduced the close-of-month cycle from 6 business days to just 2, saving $80,000 in overtime expenses for the accounting department. In contrast, the market adjustment required to bring my salary to par with the new hires was exactly $45,900. The return on investment for keeping me was obvious to anyone with a basic understanding of mathematics. I titled the 54-page document The Cost of Institutional Memory and had it bound in a leather cover at a local print shop. However, I was not naive. I knew that presenting this document alone would not be enough to move a rigid executive board. I needed leverage, a strong external force to make them understand the gravity of my position. I opened my personal email and pulled up a message thread from Grant Caldwell. Grant was the managing partner of Caldwell Financial, our chief competitor in the regional logistics space. For the past 6 months, he had been quietly courting me, asking if I would be interested in joining his firm as their senior financial director. I had politely declined in the past, citing my loyalty to Thorne Logistics. That loyalty was now dead. I typed a brief reply to Grant, letting him know I was ready to discuss his offer. He responded within 10 minutes, suggesting a phone call. By the end of the call, I had a formal written offer in my inbox. Caldwell Financial was offering a base salary of $174,000, a generous signing bonus, and full remote flexibility. Grant explained that their new logistics consulting contract with a national retail giant was worth $15 million, and they needed a senior director who knew Thorne's client structures inside and out. It was a massive leap from my current salary of $118,500, and it proved beyond any doubt that my skills were highly valued in the industry. The next morning I arrived at the office at 7 o'clock, long before the administrative staff or the executive assistants. The quiet corridors felt different now, no longer a place of comfort, but a battlefield. I walked up to the executive suite on the fourth floor and entered the empty office of CEO Reginald Thorne. I placed 3 separate items in the center of his mahogany desk. The first was my formal letter of resignation, effective in 14 days. The second was a copy of the competing offer from Caldwell Financial, with the salary figures clearly visible. The third was the bound, professional copy of my 54-page analysis, which I had printed the night before. I went down to my office, logged into my computer, and began my day as if nothing had changed. I processed expense reports, reviewed shipment ledgers, and even helped Audrey Gable resolve a balance sheet discrepancy that she had been struggling with for 2 days. I was professional, calm, and completely detached. At 9:30, my office phone rang. It was the CEO's assistant. "Mr. Thorne would like to see you in the main conference room immediately, Dwight." I took my notebook and a pen, stood up, and straightened my tie. As I walked past Bradford Miller's office, I saw him frantically typing on his keyboard. He did not look up, but the tension in his shoulders was obvious. The game had officially begun. When I entered the executive conference room, the atmosphere was thick with tension. Reginald Thorne, the CEO, sat at the head of the long glass table. He was 59 years old, a man who prided himself on his military background and his no-nonsense leadership style. To his right sat Diana Forbes, the chief operating officer, and to his left was Bradford Miller. Sean Kelly from Human Resources was seated at the far end, looking nervous. My 54-page report sat open in front of Reginald. He tapped the pages with his pen, his face unreadable. "Dwight, please sit down," Reginald said, gesturing to the empty chair opposite him. I remained standing, leaning my hands on the back of the chair. "I prefer to stand, Mr. Thorne. I have a lot of work to finish at my desk." Reginald narrowed his eyes, but did not push the issue. "We have reviewed your packet, Dwight, and your resignation letter. I must say, this is a highly unorthodox way to request a salary adjustment." "It is not a request for an adjustment," I replied smoothly. "It is a notice of resignation. I was told yesterday by my manager that my salary was locked due to company policy, and that I should take it or leave it. I have decided to leave it." Bradford cleared his throat, his face flushing red. "Dwight, that was a private discussion. We were talking about budget constraints. It was a statement of corporate reality." "Bradford," I said, turning to him, "and I have made a business decision based on that reality. Caldwell Financial values my 12 years of institutional knowledge at $174,000. Thorne Logistics values it at 30% less." Deanna Forbes leaned forward, her expression serious. "Dwight, you have to understand our position. If we adjust your salary by such a large margin outside of the annual review cycle, it creates a precedent. We have standard structures to maintain." I looked at Diana. "The structures you are maintaining are built on a legal house of cards, Diana. In fact, let us discuss the restructuring plan you have been secretly drafting for the operations division." The room went dead silent. Bradford looked down at his legal pad, refusing to make eye contact. I opened my folder. "I know that you are planning to eliminate the positions of 45 senior logistics coordinators over the next 90 days. I also know that you plan to execute this in 3 separate waves of 15 employees each to avoid triggering the notice requirements of the California Worker Adjustment and Retraining Notification Act." Sean Kelly gasped, shifting in his seat. Under the California Labor Code, specifically Section 1400, the threshold for a mass layoff at a covered establishment is 50 employees within a 90-day window, I explained, my voice steady. However, the law also looks at the aggregate effect of rolling terminations designed to evade the statute. By laying off 45 senior coordinators and failing to provide the mandatory 60 days of advance warning, you are exposing this firm to massive civil penalties, including back pay and benefits for every affected worker, plus a daily fine of $500 per violation. Reginald Thorne leaned back, his jaw tightening. "That is proprietary strategic planning, Dwight. How did you get access to those files?" "I am the Director of Financial Analysis," I reminded him. "Every severance calculation and departmental budget projection goes through my team. Did you honestly think I would not see the legal liabilities in your numbers? I have documented this compliance failure, along with several other federal labor standards violations, and prepared a full brief. Bradford Miller was sweating, realizing his job was on the line if this compliance failure leaked. He was the one who had signed off on the rolling layoff plan to save operational costs, and now he was looking at a potential disaster. Sean Kelly whispered to Bradford, confirming that HR had warned him about the 90-day window. Our chief legal counsel, Clifford Finch, was not in the room yet, but Reginald looked toward the door as if wishing he were. "What do you want, Dwight?" Reginald asked, his voice low. "I want Thorne Logistics to comply with the law," I said. "And if you want me to stay for a transition period, I expect my salary to be adjusted to $186,000, retroactive to the start of this fiscal year, along with a retention bonus of $54,000. I also want a written guarantee that the senior coordinators will receive their legal 60 days of notice under the Warren Act." Reginald stared at me, his eyes cold as ice. "You are putting a gun to our head." "I am pointing out the cliff you are about to drive over," I corrected him. "You have 24 hours to decide." The next morning, the board of directors called an emergency meeting. I was instructed to attend via video conference, as the board chair, Beatrice Albright, was dialing in from the East Coast. When the video feed connected, I saw her stern face on the large screen in the main conference room. Sitting around the table were Reginald Thorne, Diana Forbes, and Clifford Finch, the chief legal counsel who had finally joined the discussions. "Dwight," Beatrice Albright began, her voice crisp through the speakers. "We have reviewed your report regarding the logistics restructuring and the potential liabilities under the Warren Act. Our outside legal counsel has confirmed your analysis is correct. We cannot proceed with the rolling layoffs without substantial legal risk." I nodded. "I am glad we are on the same page, Ms. Albright." However, Beatrice continued, "Clifford Finch has raised concerns about the confidentiality of our internal documents. He has prepared a comprehensive non-disclosure and release agreement that you must sign before we can authorize your new compensation package of $186,000. Clifford Finch slid a thick document across the glass table toward my empty seat. He had a smug smile on his face. "It is standard executive protocol, Dwight. It protects the company's proprietary data and ensures that any internal observations you have made during your tenure remain strictly confidential." I walked over to the table, picked up the document, and flipped through the pages. I did not sit down. "I am familiar with this language, Clifford," I said, looking directly at him. "But I am afraid I cannot sign this agreement in its current form, especially not the clause that releases the company from liability regarding financial irregularities. The document you prepared restricts me from reporting any operational anomalies, adjustments, or variance metrics to federal or state bodies and provides a penalty of $50,000 per breach. That is not standard protection. It is a gag order." Bradford Miller, who was sitting near the corner of the table, frowned. "What financial irregularities?" I pulled a thin blue folder from my briefcase and placed it on the center of the table. I sent the digital version directly to Miss Albright's email 2 minutes before this meeting started. Diana Forbes leaned forward, took off her glasses, and immediately began scanning the transaction sheets I had provided, her expression growing increasingly grim. "Let us discuss the corporate transactions involving a vendor named Bramblewood Assets," I said, my voice echoing in the quiet room. "For the past 24 months, I have been tracking a series of quarterly payments made to this entity. The first transaction occurred exactly 2 years ago in the amount of $18,450, categorized as special legal consultancy fees. Since then, the payments have grown by 15% each quarter. Over the past 4 years, the total amount diverted to Bramblewood Assets is exactly $3,800,000. Clifford Finch's smile vanished. His face drained of color, turning a pasty gray. "This is completely irrelevant to your compensation review, Dwight. Those are approved corporate expenditures." "They were approved, yes, but by whom?" I asked, opening the folder to page 12. The authorization forms bear the electronic signature of the chief legal counsel. However, when I audited the state registry for Bramblewood Assets, I discovered that the limited liability company is registered to a residential address in Nevada. The sole manager of that LLC is Logan Fowler. I paused, looking at Clifford. Logan Fowler is your brother-in-law, Clifford. I verified this by pulling the marriage certificate of Claire Finch, formerly Claire Fowler, which you co-signed as a witness. Furthermore, the registration fee for the entity was paid using a corporate credit card under your discretionary legal budget. On the screen, Beatrice Albright's eyes went wide. Clifford, is this true? This is a ridiculous fabrication, Clifford shouted. Standing up so fast, his chair rolled back and hit the wall. Dwight Vance has exceeded his authority. He is searching through my personal life to deflect from his own extortion. I kept my calm, professional demeanor. I also have the banking routing numbers, showing that the funds sent to Bramblewood Assets were immediately transferred to a personal brokerage account in your name, Clifford. Furthermore, the electronic approval signatures on these vendor invoices were backdated, which constitutes forgery under California Penal Code Section 470. I have compiled the forensic metadata showing that the approvals were created from your corporate credential login on weekends when the office was empty. The database logs transaction metadata, including the local machine's serial number, which matched your company-issued laptop. Reginald Thorne stared at his legal counsel, his expression one of pure disbelief. Clifford, tell me he is lying. Clifford opened his mouth to speak, but no sound came out. He slowly sat back down, his hands trembling as he stared at the blue folder. The evidence was absolute, and he knew it. The fallout was immediate and devastating for the leadership team of Thorne Logistics. Within 3 hours of the board meeting, outside forensic accountants were in the office, and Clifford Finch was escorted out of the building by private security, his personal effects packed in a cardboard box. The board immediately suspended him, and within 48 hours, the local authorities were notified of the grand theft and forgery. Bradford Miller was placed on immediate administrative leave. While he had not actively participated in the embezzlement, his refusal to investigate the irregular vendor payments when I first flagged them 24 months ago constituted gross negligence. The board could not trust a financial manager who shrugged off suspicious transactions as company policy. I sat in my office, packing my own belongings. Reginald Thorne walked in, looking like a man who had aged 10 years in a single day. Dwight, he said, his voice hollow. Beatrice Albright and the board have authorized the full compensation package, $186,000 base salary, the retention bonus, and a promotion to chief financial officer to replace Clifford. We need you to steady the ship. I looked at the mahogany desk, then at the man who had dismissed my worth just 48 hours prior. I appreciate the offer, Reginald, I said quietly, but my resignation stands. I will complete my remaining 12 days to assist the forensic team, but then I am leaving. Why? Reginald asked, almost pleading. We are giving you everything you requested. You are giving me what I asked for, because you have a gun to your head, I replied. You did not value my 12 years of loyalty when I came to you with a simple request for fairness. You only valued it when you realized that without me, your legal liabilities and internal fraud would destroy the firm. That is not a partnership, Reginald. That is a hostage situation. I left Thorne Logistics 2 weeks later. During my final 12 days, I worked closely with the external forensic auditors, helping them map the cash flows and show them where the records had been manipulated. I showed them exactly how Clifford Finch had bypassed the automated controls by grouping the transactions into amounts below $25,000, which was the threshold for automatic board approval. On my final day, I walked past the open floor, seeing the junior analysts looking at me with a mixture of respect and fear. Pierce Cole looked down at his keyboard, realizing he would now have to solve his own accounts' receivable errors without my intervention. The day after my departure, I started my new role as the Chief Financial Officer at Caldwell Financial. Grant Caldwell welcomed me with a glass of high-end bourbon and a genuine smile. My signing bonus of $54,000 was paid in my first pay cycle, exactly as promised. At Caldwell, I did not have to fight for basic respect. My salary was set at $174,000, but more importantly, I was given the authority to build a transparent compensation model. Within 6 months, we implemented a policy where salary bands were shared openly within departments, and annual market adjustments were automated to prevent the salary compression that had destroyed my old department. The revenge, if you want to call it that, came in the market. Over the next year, Caldwell Financials secured 4 of Thorne Logistics' largest regional shipping clients, including Highland Distribution and Vanguard Freighters. They left because they had heard rumors of the financial instability and the audit investigation at Thorne. Without my institutional knowledge of the custom billing systems, Thorne Logistics struggled to process complex interstate shipments, leading to delayed deliveries and frustrated customers. 2 years after I walked out the door, Thorne Logistics was acquired by a national competitor for 40% of its peak market valuation. The audit report had concluded they failed to maintain adequate internal control over financial reporting, a major violation of Sarbanes-Oxley Act requirements, which tanked their stock price. Reginald Thorne was forced into early retirement, and Bradford Miller never worked in logistics finance again, his reputation ruined by the negligence findings in the official audit report. Sometimes, the people who work the hardest and say the least are assumed to be permanent fixtures of the office, like the desk chairs or the light fixtures. They assume you will always be there, silent and reliable, accepting their 3% crumbs while they build their fortunes on your back. But every quiet employee has a breaking point. When you refuse to value your people, you are not just saving a few dollars in the budget, you are actively planning your own downfall. Knowing your worth is not about greed, it is about survival in a corporate world that will take everything you have if you let it. I calculated my value, I presented the bill, and when they refused to pay it, I took my invoice to someone who would. If this story reminded you of your own worth, please hit the like button and subscribe for more corporate revenge stories. Let me know in the comments if you have ever had to walk away from a company that did not value your loyalty. I read every comment and look forward to hearing about your own victories in the workplace.